Good morning, ladies and gentlemen. My name is Greg Michalowski from Forexlive.com. Today's date is September 16th, 2022. This is the morning Forex report. Last day of the trading week, quadruple witching hour in the U.S. stock market. Stocks are under pressure. UK retail sales came in weaker than expected. Those and more in the technical report, and with a little fundamentals included. Overnight, we had UK retail sales come in at minus 1.6%. We also had China data, which on the surface looked better than expected, but it was actually, analysts said, was weaker than expected, as some of the gains are from temporary measures put in place to spur on growth in things like autos and perhaps housing market. But things are still looking bad in China and in the UK. The retail sales data are indications of slower growth in that country as a result of higher energy costs. Also overnight, a key warning came out from FedEx, I should say, that they're looking to cut jobs, also looking to cut centers and costs across the board as a result of slower growth. FedEx is thought to be a barometer for the global economy, and that has stocks on the defensive here today, down once again. The S&P was down 4% at the close yesterday and looking to tack on additional losses in pre-market trading today. It is quadruple witching hour, which can lead to increased volatility and certainly more volume, so be aware of that. It's going to be a tricky Friday. Let's take a look at some of the charts, starting with the euro versus US dollar. Looking at the hourly chart, we've been looking at this range through here. On the top side, we have this swing area coming between 1.022 and 1.0032. I guess it's 1.0022 and 1.0032. And between that is the 50% retracement of the recent range, or well, the September trading range, which comes in at 1.0030. And trading on Wednesday, the price moved up into that yellow area through here. And also yesterday, the market got close to it. Today, not so close. We more or less found sellers closer to the 200-hour moving average, and the price moved down. We've also been looking at this 99.51 level on the downside. Earmarked that as the July 14th low. That's this low right here. And the market in the past two trading days have been able to find support buyers against that level here and here. In trading today, the market on the move to the downside here, spurred on by the weaker retail sales in the UK, did move below that level, but you can see quickly bounced back and started to seeing some re-establishment of the 99.51 level as a support level here, staying below the 61.8% retracement of the same September move on the top side, and below the parity level. Has the sellers still in control for this currency pair, but I would love to see the price move below the 99.51 level with a little bit more momentum in order to give the sellers more confidence to the downside in this currency pair. Taking a look at the daily chart here. You know, we still have this box up here and this box down here where the market had been focused their trading on for an extended period of time. In trading earlier this week, the price did move above those levels, but came up to the top side trend line here, as you can see, and found sellers against that level. On Tuesday's trade, the market moved sharply to the downside, and we saw the price now bottoming at the 99.51 level. This is off the CPI data this week. So that's a look at the euro versus the US dollar. Sellers remain in control below the 61.8, below the parity level, and looking to get below the 99.51 level to open up the door to the downside toward these lows right here. Let's take a look at the dollar versus yen. And if we look at the daily chart here, we did move up this week to the high price that we saw in prior weeks near the 144, let's call it 145 level. We saw a Bank of Japan asking for rates at this point right here, sending the price back down toward this old trend line here, and we've been able to find some support against that level. This is what it looks like on the hourly chart. Fell below this swing area, but since then the price has been able to reestablish support against the 200-hour moving average until today. Why? Because the price going sideways here brought those moving averages closer and closer together. In fact, the 100 and 200-hour moving average are pretty much at the same level, 143.26, indicative of a market that's up and down, waiting for the next shove to the upside or the downside. On the top side, we have that intervention fear, which perhaps keeps the sellers in play and puts a lid on the pair. On the downside, the moving averages have been a barometer for bullish and bearish, or typically is. We did move below it again here, but then bounced above it and tried to stay above it, but we're opening it up in the New York session below both those moving averages, tilting the bias, at least in the short term, to the downside here for this currency pair. We'll see if we get follow through selling in trading today. That would take out the lows from Wednesday, which come in around the 142.51-ish type area. Get below that level, we have this other swing area through here to get to and through, and then the 38.2% retracement of the last trend move to the upside here. That was the stall point during last week's trading, and this week's trading is also a early stall point ahead of this low and ahead of the 38.2 at 141.47. It's going to be a key level going forward for the dollar versus yen if the sellers are to take control. If the price can't get below the 38.2% retracement, they're not taking control. Okay, so be aware of that. Right now we're just below the 100 and 200-hour moving average. If we move back above those moving averages and show some momentum, the range here is fairly narrow today. We could see a rotation back up to the upside with the 144.38 to 144.55 level being a level ahead of the extremes. Be aware of that level on any further upside momentum. I mentioned that the sterling versus US dollar had weaker than expected retail sales, and that took the price down to and through the low price from March 2020 at 1.0408. Earlier this week, the price did move below that level. Actually, it was during last week's trading where the price low moved to 1.0404, and trading today, this is the hourly chart here on the sterling versus US dollar, came down to those levels right here, tried to find some support against it, and then fell through it down to 113.49.6. I have to go to another chart here. This is the sterling versus US dollar on a monthly chart. And the last time the price traded this low, this is the 114.08 level, you have to go all the way back to 1985, folks, 1985. So sterling trades at multi-decade lows here. Very cheap to go over there, but the bias remains to the downside as the economy remains in some concerns about the economy, and that certainly has put a downward bias on this pair. Now, the corrective move to the upside here, going back to the hourly chart, did move back above the 04 to 08 level here briefly. Could not sustain the momentum. We're starting the North American session on the downside with the defensive, with the price trading at 113.76. Traders will continue to eye this level 1404 to 08 as close risk level. Yes, we can move a little bit above it, but we don't want to see momentum above that level for any extended period of time. We tried here. The buyers had their shot. They failed. The market is back down. Pay attention to that level, folks. Other key news here in the market is the dollar versus Canada moved above its high price for the year, and also trades at the highest level going back to November of 2020. This is the daily chart. You can see the break above the highs for the year through here. That happened yesterday, late yesterday, and the market was able to stay above that level and trading here today. The 50% midpoint of the range since the 2020 high cuts across at 113.36. That is the next target on the top side for this currency pair. Get to and through that level opens the door for further momentum in the dollar versus Canada. So a little bit more details today in some of our major indices. I think it's worthy of a view. Let me get the dollar Canada over here, show you exactly what I meant. I was off the chart there. But if you look at the 50% retracement, that's up here, 113.36 for that currency pair. Sorry about that. Anyway, my name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.